All right, welcome back everybody. My name's Austin. Today I want to update you on the latest news involving Bitcoin, involving Ethereum 2.0, involving altcoins making news in the space today. But first, I want to share with you some interesting perspective for Bitcoin and cryptocurrency regulation going into 2021. You see, this all stems from head of JP Morgan, Jamie Dimon, who says that even though JP Morgan has warmed up to cryptocurrency, yesterday he stated that Bitcoin right now is not his cup of tea because of a lack of clarity regulation-wise from the US government. And just for context, banks in 2020 are legally allowed to custody crypto for the first time. JP Morgan is already doing it. The SEC has already done it, meaning cleared Bitcoin is not a security. Now, as the host will bring up, we're still waiting on some financial products that maybe the SEC can clear, but Bitcoin on its own has the green light from the SEC. Listen to Jay Clayton explain why they've cleared Bitcoin, but also explain that as a payment mechanism may very well be facing regulation in 2021. Watch this, then I want to share with you my opinion.
A couple of other topics. One is cryptocurrency, which has been on your watch. You haven't necessarily approved it for any real market-making opportunities, and I think there were a lot of people hoping that you would. I want to show you a tape. I talked to Jamie Dimon yesterday. Obviously, JP Morgan's gotten behind crypto. I think there were a lot of people who thought that he might also be a supporter of Bitcoin, and he said that he wasn't because of this. Let me play it for you.
My experience with the government is they can regulate whatever they want when they feel like it. And, Bitcoin is worth $200 billion, something like that. If it gets bigger and bigger and bigger, it will be regulated.
So what do you think? Yeah. Will they?
Well,
you didn't.
Well, let's put it this way, Andrew. We did not regulate Bitcoin as a security. When people use crypto assets as securities to raise capital for a venture, the SEC regulates that. And what was happening in the ICO craze was people were using ICOs and essentially making public offerings of securities without registering with the SEC. We determined that Bitcoin was not a security. It was much more a payment mechanism and store of value. But the government does regulate payments. And what we are seeing is that our current payment mechanisms, domestically and internationally, have inefficiencies. Those inefficiencies are the things that are driving the rise of Bitcoin and other stable, I won't say stable in the case of Bitcoin, but driving these types of digital assets. And we're going to see more of that. And I think we're going to see this mature, and we're going to see more regulation around the payment space.
Okay, a little foreboding, but more sort of just a fair warning for Bitcoin cryptocurrency investors into the future. Our current payment mechanisms have inefficiencies. Those inefficiencies are the things that are driving the rise of Bitcoin. What do you think? What do you think about this? Bullish or bearish? My general opinion is that regulation is sort of inevitable. As the cryptocurrency space grows, as people use it, just some people as an alternative to international or domestic payments, the government's probably going to notice that. And the world is trending digital anyway. So whether it's with cryptocurrency or not, just digitally, the regulations have to catch up, have to be updated either way. Now, regulation means that they like it. They want to make money off it. They want to keep people safe, but want to keep people using it if they want. Now, some of these altcoins, probably a lot of these altcoins, and probably a lot of these newer stable coins might be in trouble. They might just be looked at differently as they should be than Bitcoin, but I will keep you updated. Give me your thoughts down below. Next piece of news on Ethereum, $10 million more in Ethereum was just deposited by a Dubai-based company. And let's use this as an opportunity to see where we are with the launch of Ethereum 2.0. As of right now, a little over 100,000 ETH have been staked in the ETH2 deposit contract, and we need about 400,000 more for this thing to launch. So right now, we are about 20.1% of the way there, and we have until December 1st. And it's interesting because the time elapsed from the first deposit until December 1st, the minimum Genesis target, 73.2% of the time has already elapsed, or 20.1% of the way there. I think many people are just sort of hedging their opportunity risk. No reason to do it now when they could do it the final day, the final week, but I'll keep you updated. And this is global, because as for this Dubai-based company called IBC Group, according to the report, the firm has partnered with a Canada-based staking service, CanETH. Maybe some of you Canadians have used it for the initiative. Specifically, the firm will stake a total of 21,948 Ethereum in 3 tranches for a total of 687 validators. So it's happening. The majority will probably happen in the final days / final week. Okay, next update. Some of you still had questions on sponsor of the channel, Blockfi. For those of you interested in earning a little bit of passive compounding interest monthly on your Bitcoin, Ethereum, Litecoin even, Blockfi is one of the most secure solutions out there. And let me share with you why. Because in a nutshell, they offer traditional banking services to crypto investors. So their financial products include high-yield interest-bearing accounts, earn up to 8.6% APR. You can deposit Tether, Gemini Coin, USDC, among others. Another financial product that they offer is crypto-backed USD loans, basically allowing you to access your liquidity without selling. And of course, with Blockfi, they offer no-fee trading, basically the ability to exchange cryptocurrency pairs between BTC, ETH, Litecoin, Pax Gold, and stablecoins. So, great option for those of you looking. Use the link down below and get up to a $250 crypto bonus with a deposit of $25 or more in crypto. But next piece of news, Zcash, privacy coin, has just undergone its first halving and also had a major upgrade, dropping its founder's reward, which I believe not a lot of people were a fan of, giving the founders just 20% of each block, each mining reward. But either way, they had a halving as well, so this cuts the miners' rewards from 6.25 Zcash coins to 3.125 Zcash coins. So in that way, this was a little bit of a supply shock to the Zcash ecosystem. In another way, this makes it half as profitable for people to mine Zcash, which against Bitcoin would maybe worry me a little bit with these other proof-of-work coins. But this one offers privacy for its users through zero-knowledge cryptography dubbed ZK Snarks, which is developed by the electric coin company ECC, and this comes into play in the sense that they just cut their founder's reward. Previously, Zcash's unpopular founder's reward meant miners typically receive 80% plus transaction fees for mining blocks, and the remaining 20% of the reward was split among various parties, including almost 10% to the ECC founders, 2.2% to the Zcash Foundation, 5.75% to ECC itself, and 2.2% to ECC employees' compensation. But there was an upgrade. So now do the miners get 100% again? Well, actually, following the upgrade, miners will continue to receive 80% of the block rewards, but the remaining 20% will be divided among the new Major Grants Fund, 8%, again, the ECC 7%, and again, now the Zcash Foundation, instead of 2%, gets 5%. Okay, me personally, I'm not bullish on Zcash because of things like this, but you let me know. Next piece of news on Matic. Matic becomes the first outside Ethereum to launch native Chainlink feeds. So check this out. And just as a reminder, Matic is a layer 2 Ethereum scaling solution, and like other layer 2 solutions, Matic supports Ethereum tooling and allows developers to simply pick up their Ethereum smart contracts and deploy it on the Matic sidechain within a matter of minutes. And it would be cheaper and more scalable if they did that. But now they've just launched 5 Chainlink price feeds that are native to their own ecosystem. So although there are many promised or existing Chainlink integrations outside of Ethereum, the majority of them are still in development or are indirectly using Ethereum's feeds. So this is a small win for Chainlink, small win for Matic, and Matic now features 5 price feeds: Matic USD, USDC, ETH, USDT, and DAI, all against USD. And for all you Bitcoin holders, get excited. Support for Bitcoin's Taproot upgrade surges to 45%. Taproot being the upgrade that will boost privacy and also efficiency on the network. F2 Pool, the largest Bitcoin mining pool that currently provides around 17% of the blockchain's total hash power, has been listed on the Taproot activation website. So all these mining pools around the world are slowly saying yes. And with the addition of F-Pool, Taproot has now gained the combined support of miners responsible for 45% of Bitcoin's hash power. That means we have just 6% to go from reaching over 50%, a majority. So we are almost there. This is happening. This will probably happen very soon, which will ease congestion on the Bitcoin network. I like that, and make it a little more private. As we get more information, I'll keep you updated. That is the video. My name's Austin. See you tomorrow.